Tired of trying to invest in halal stocks by yourself? There are tons of guides on investing in stocks, but almost none of them tell you if they're actually halal to invest in. You might have watched hours of videos, read countless articles, and still be unsure if you're putting your money into something that's truly permissible. And I get it. Most guides skip the Islamic finance rules or make it way more complicated than it needs to be. But don't worry, it's not your fault. No one actually shows you the real way to invest in halal stocks while keeping things 100% halal. But I'm not going to gatekeep. In this video, I'll walk you through a step-by-step process so you can invest in halal stocks confidently without wasting hours on research and making sure everything you invest in is in line with our Islamic principles. But before we get into that, let's talk about the wrong way to invest in halal stocks. I first started investing at the age of 17 and had a limited understanding of halal investing. I thought so long as I wasn't investing in any companies that were selling pork or alcohol, I was pretty much safe. And I think a big assumption here is that investing in any tech company or any healthcare company is halal to invest in, and that they're automatically halal, and that's all you need to know. Another big mistake a lot of investors make is that they're not sure why a stock is halal or haram. It's really important to dive in and understand why a stock is halal or haram, which will help you make a better investment decision. Knowing this will help you really understand why you're investing in this company and what makes it halal. The next mistake many investors make is investing into a stock just because someone online says it's halal. Whether it's on Reddit or Twitter, just because someone online says it's halal doesn't necessarily mean it's halal. It's important to do your own due diligence and check whether or not there's Sharia compliance backing it. And the final mistake many investors make is ignoring financial ratios and doing your own due diligence on the company. The most important rule is just because an investment is halal doesn't necessarily mean it's a good investment. And if you invest in this way, you could end up putting your money into stocks that aren't truly halal, which defeats the whole point of investing Islamically. But don't worry, there's a right way to do this. Step 1. Understanding what makes a stock halal. Before we look at investing in stocks, it's important to understand the criteria and the guidelines to understand what makes a stock halal or haram. You see, in the Quran and Hadith, there's not explicit rulings on how to invest in the stock market. Modern day scholars recognize that this would be a problem, as Muslims today would be at a disadvantage when it comes to building wealth without the tools to properly navigate the stock market, which inevitably contains portions of interest and other non-Islamic activities. And so scholars have come up with a framework that allows us to invest in line with Islamic finance principles. And these are called the Sharia standards. The screening is split into two. We have the business screening and the financial screening. The business screening requires that a company's core activities shouldn't be involved in haram activities. For example, we avoid companies that are in industries like pork and alcohol. The second part of the screening process is the financial screening. The first part is the 5% threshold rule, which dictates that a company can't earn more than 5% of its revenue from impermissible sources. You see, scholars have taken a look at the stock market and have found that it's very difficult to find a company that earns 100% of its revenue from permissible sources. For example, you can have a large tech company where its core business activities are permissible. However, it may have a small chunk of its cash in an interest savings account. So what the ruling states is that it can't earn more than 5% of its revenue from these impermissible sources. It's important to note that the impermissible revenue will have to be purified, which we'll be touching on later in this video. The next big financial criteria is the company's debt. According to the majority of Sharia standards, a company can't hold more than 30% debt. Let's say, for example, you wanted to go through the manual approach of screening for a halal stock. How you would do that? Let's look at Microsoft for an example. You can search up here Microsoft annual report, click on this website here, and then you just scroll down, find the latest annual report. I've just jumped here to the income statements of the financial data on the company. You can see here all of their financials, including their balance sheets, so you can see what their assets are, what their liabilities are, what the total debt is for the company, things like that. You'll find all of that information on the annual report. If you want to screen manually, but you want an easier way to look through multiple different companies, you can use a platform like Yahoo Finance. You search up the stock here. In this case, we've searched up Microsoft again. You flick down here to financials and you can see all of the same information. So you can see the income statement, you can see what income they've earned, you can see the same thing. So you can see the interest income, which would be the haram portion of the revenue, and you can see the balance sheet with the same information as the annual report, such as the debt, the assets, liabilities, things like that. It's just an easier method of manually screening through stocks. What I like to do is then put these numbers on a spreadsheet and just make sure they're below. For example, the revenue is below 5%, the debt is below the 30%, and then just make sure all of those financials are reached so that they meet Sharia compliance for the standard I'm looking at. The second step is finding halal stocks. When I started my halal investing journey, the only way to check for halal stocks was to manually check through annual reports just to make sure that it met the criteria, which meant that I had to look through a bunch of financial reports just to find out where the company's revenue was earned and whether or not its debt was below the 30%. But now, there's a much easier way to find halal stocks. Instead of checking manually through each company, you can use a halal stock screening app to help simplify the entire process. There's a bunch of different apps that are available on the market, but one I do recommend is Muslim Exchange. How it works is once you've downloaded the app, you can search up the stock that you want to check and it will tell you whether or not it's halal. The cool thing about the Muslim Exchange app is that it screens 5 different Sharia standards. So it'll tell you exactly which Sharia standard it passes. Here is an example of how to use Muslim Exchange, which is a halal stock screening app that screens 5 different Sharia compliance standards. So let's take a look here. What you have to do, this is the Muslim Exchange website. Once you've signed up, you can search up a specific stock. Let's say, for example, we're looking at Apple. All right, let's search up Apple. Okay, so this is the Apple stock. You click on that. Okay, so we can see here on the halal stock screening app, we can see Apple. We can see the name of the company, what the ticker is, whether or not it's compliant. In this case, it is. The price of the stock, some information, the overview, market cap, things like that. You can see financial performance, analyst forecasts, some news about Apple, its earnings, who the CEO is, a description of the company, things like that. Okay, but the important thing is here is the compliance. So let's have a look. So we can see here, Apple is Sharia compliant. It passes 3 out of 5 of the Sharia standards that Muslim Exchange screens against. They screen for AOFI, the S&P, DJI, FTSE, and MSCI. We can see here it's passed AOFI, S&P, DJI, and has failed the other 2. We can flick through here. It tells you here S&P tells you what the debt is, what the requirements to pass S&P is, and whether or not it passes it. You can see here it fails on the cash and accounts receivable, and similar with the MSCI. It tells you here, 2.5% of impure income from Apple that it earns, the purification that you need, and the zakat. So it's a really easy way to look through and screen for halal stocks without having to manually go through each individual stock, look at their annual reports, look at their financials, see whether or not it passes compliance. This is a really easy way to sort of see that. You can even see here the financials of the company, how they've been doing, what the forecast is. The analyst consensus here is to buy Apple stock. Just some information about the stock in general, which is pretty handy when deciding whether or not to invest in a stock. So the first point would be to look at whether or not it's halal. In this case, Apple is compliant for 3 out of 5 of the different Sharia standards. Then whether or not it's a good investment. As we mentioned earlier, just because an investment is halal doesn't necessarily mean it's a good investment. I think an important thing to note here is with the compliance, for example, it says here it passes 3 out of 5 of the Sharia standards. Does it need to pass all 5? No, not necessarily. In fact, it only needs to pass 1. All of these Sharia standards, there are only slight variations between them, and they account for slightly different factors. Each individual standard has been approved by an Islamic finance scholar, so it doesn't necessarily need to pass all 5 compliance standards. So long as it passes 1, it is Sharia compliant. However, if you're more comfortable with a specific Sharia standard, you may want to look out for that one. For example, a lot of people are familiar with the AOFI standards and only invest in halal stocks that pass the AOFI standards. However, all of these Sharia standards are usable and it just really needs to pass 1. I think the big difference between manually screening halal stocks and using a halal stock screening app is keeping up with the change in compliance. A very useful feature of halal stock screening apps is the ability to notify you when there is a change in compliance. If you are doing this manually, although it may technically be more thorough, if you know how to do it, you have to sort of set reminders every quarter just to keep updated with the latest compliance, whereas a halal stock screening app, no matter which one you use, will likely notify you when there is a change in compliance, which just makes the process easier. They have algorithms that they run, making sure they have the latest financials on the different companies, and it just makes the process a lot easier when it comes to managing your Sharia compliance with your stocks that you invest in. The other way you can check for halal stocks is to use a halal ETF. So when it comes to investing in the stock market, you have individual stocks where you're investing in an individual company, and you also have ETFs. An ETF allows you to invest in a variety of stocks, usually across different sectors. The benefit is that it allows you to invest in a diverse range of stocks without having to manually invest in each individual company, and at a much lower cost. So in the halal investing world, there are a bunch of different halal ETFs available on the market. So what you can do is look up their holdings and see which companies they've got invested in their ETF. You can then choose those individual stocks and invest in those, knowing that they're Sharia compliant to invest in. Alternatively, you can invest directly in the halal ETF. What you do is, for example, let's look at the HLAL ETF, which is on the Wahid website. So I'm on the Wahid website here. I'm on the specific ETF. You scroll down here to holdings, which I've clicked on here, and you can see all the different holdings that the halal ETF holds. All of these stocks would be Sharia compliant as they're part of the halal ETF. You just got to make sure that it's updated to the latest quarter. You can see here 24th of February 2025, so it's pretty updated there. So all of these stocks on the ETF would be Sharia compliant to invest in. And you can see specifically how much this ETF and what weightings of all the different stocks it's holding. So this is another really easy way to look at a halal ETF, look at its holdings and see which stocks are halal to invest in. You can manually invest in all of these stocks or some of these stocks. And the benefit of obviously going directly with the ETF is that when there's a change in compliance, again, they'll manage that, they'll rebalance it based on what's happening in the market. And it's also an easy way to invest in all of these companies without having to manually add them to your investment pie. So now you know how to buy halal stocks. The next step is to actually start investing. So the first part of that process is finding an investment platform or an investment brokerage to invest with. I get this question a lot. How do I decide which investment platform to go with? So instead of recommending a specific platform, how I would go about this is to look at a few different factors. The first one would be fees. So some platforms charge you a fee to buy and sell shares. So for example, if you're buying and selling frequently, this may be a factor you want to consider, because if there are high fees, they'll likely eat into your profits long term. Another fee some platforms charge is a withdrawal fee. So for example, once you've sold your shares and you've made your profit and you want to withdraw that to your bank account, some platforms charge you a fee to make that withdrawal. You also have management fees. So depending on the investments that you're investing in, some platforms also charge you a management fee to manage those investments. And finally, you have subscription fees. So some platforms, instead of charging you fees when you buy and sell shares, they charge you a subscription fee. So it's a monthly fee that goes out, which allows you to use their platform. So depending on the style of investing you're doing, how often you're investing, these different fees may affect your investments. The second factor is account minimums. So some platforms have a minimum amount you need to invest with them before you can use their platform. For example, some platforms have a $100 minimum investment fee. The third factor is the type of investment options available. So for example, I'm based in New Zealand and I want to access the US investment market. Does the platform I want to use allow me to invest in US stocks? And then the next question is, do they have the halal ETFs or the halal stocks that I want to invest in on their platform? So it could be the type of investment, the type of market, or the specific halal investment you want to invest in. Does the platform that you want to go with have those options? And the final factor I like to consider are the features of the investment platform. For example, does it allow you to make fractional investments? Let's say the stock you want to invest in is currently trading at $500, but you don't currently have $500 to invest in that entire stock. Does the platform allow you to buy $5 worth of that stock? Most platforms nowadays allow you to invest in fractional shares. However, some don't. So this may be something you want to look at when choosing an investment platform. Another super important feature are auto investments. So this is something I preach when it comes to investing, is automating that entire investment process. Does the platform you want to use allow you to automatically invest the money you have in their account into the investments you want to invest in? And if this is something important to you, then you definitely want to make sure the platform you go with has this option. And another really cool feature that some platforms have are pie investments, where they allow you to set up your portfolio and they allow you to continue to invest in those specific investments on a regular basis. When it comes to investing, you have the option of either doing it yourself or going with a robo-advisor and automating that entire process for you. With DIY investing, you're manually choosing your investments and you are in charge of then rebalancing, making sure the compliance is up to date, and making sure your investments are in line with your risk profile. It typically requires more work, but is also typically cheaper than going with the next option. So with the robo-advisor approach, all you have to do is determine your investment goals, decide how much you want to invest, and let the robo-advisor know what your risk profile is, whether you want to be investing in riskier stocks or less riskier stocks. And the robo-advisor will take take care of the rest when it comes to managing your investments. That's choosing them, rebalancing them, making sure they stay in line with your risk profile. And for that service, they charge you a convenience fee to manage your investments. So a few examples of investment platforms you can manually invest with are Interactive Brokers, Free Trade, Public, Robinhood, and there are a bunch of different other ones that you can also invest with depending on where you're located in the world. And a few examples of halal robo-advisors are Wahid and Wealthsimple and Sarwar's halal portfolios. A lot of people I talk to about halal investing are very interested in the idea of getting started. However, they find the process of actually making the investment intimidating. So let's walk you through an example of how to invest with a platform that I use called Sharesies. So this is the web version of the app. So as you can see here, we have the portfolio, the explore option where you can search up different investments, the wallet where money is held ready for investing, and then a few other things there. So let's search up a stock. So let's say, for example, we've already searched up Microsoft and we can see that it's halal to invest in. We've already determined that it's a good investment and that we want to invest in it. What does that process look like? So once we've clicked on it, we can see here the name of the company, Microsoft Corporation, MSFT, which is the ticker for the stock, NASDAQ, which is the stock exchange it's currently trading on, $404, which is the current price of Microsoft. Bit of information here, a chart you can see of the price over the past year of what Microsoft has done, the 1 year low, the 1 year high, the pricing, the change over the year. You can see the dividend here that Microsoft pays out, the PE ratio, market cap, the fees with this specific platform, and the risk level of this specific stock according to this investment platform. So let's say we want to buy $10 worth of Microsoft. How do we do that? So the first thing we do here is click on the big buy button. And now it's asking me here whether I want to do a market buy or a limit buy. So let's briefly talk about the difference between a market buy and a limit buy. So a market buy allows you to buy the stock at the price it's currently trading at. In this case, $404. So I want to buy $10 worth of Microsoft today. So I'll be buying Microsoft at the $404 trading price. A limit buy allows you to buy the stock at a specific price that you set it at. For example, Microsoft is currently trading at $404, but you think or you believe over the next week or maybe over the next 30 days, the price of Microsoft will drop to $395. What you can do here is you can click on limit buy. Let's go to next. You can set the highest price to pay for the share. So we're saying that we believe that Microsoft will drop to $395. So you can set a limit buy where it'll wait till Microsoft drops to $395 and then buy shares of the company. If in 30 days, Microsoft doesn't drop to that value, the order will automatically cancel. However, if it does reach $395 or below, then the order will execute. So those are the main differences between a market buy and a limit buy. A market buy allows you to buy the stock today at whatever price it's currently trading at. A limit buy allows you to wait for the price to reach a certain point. So let's say for this example, we're going to be going with a market buy. So click on next and we say we want to buy $10 worth of Microsoft. So click on review. So it shows here the amount that we're investing, which is $10. The fees in this case is $0. We're converting here from New Zealand dollars, and that's why there's a conversion fee here. And then it just sort of gives you some more information there. And then you hit buy. It's placing the order, and then as soon as the US stock market opens, the order will execute. And that's pretty much the process of investing in a stock. It's very, very straightforward. Once you know how much you want to invest and what you're investing in, you just sort of hit buy, review the fees, make sure you're happy with that, and then you can invest there. So the next part of halal investing is a super important step, which a lot of people forget, which is purifying your investment. So we talked about this briefly earlier. So when it comes to the financial criteria for halal investments, there is a 5% tolerance for the revenue, which allows you to invest in companies that earn below 5% of impermissible revenue. However, it's important to note that this 5% or up to the 5% has to be purified in order for it to meet Sharia compliance. So let's talk about the different options when it comes to purification. So let's say, for example, you've been investing for a while and you've just realized you're investing in haram stocks. What do you do and how do you purify that? Let's say you've invested $100 into a stock that is now worth $150. What do you do? The first thing you'd have to do is sell your investment and give away the $50 in charity. And then the next option is, if you've invested in halal stocks, do you still need to purify your investments? The answer is yes. So there are two ways you make money from investments. The first one is capital gains, which is the increase in profit you make on an investment. So basically how much you sell it for minus how much you buy it for, and if there's a profit, which is basically, for example, if you bought a stock for $50 and it's now worth $200, you made a $150 in capital gains. And then the other way you make money from investments is through the dividend, which is a small portion of profits that the company give out to its investors for holding their stock. So when it comes to purification, there's a difference of opinion when it comes to purifying the capital gains, but there's a consensus that the dividend income needs to be purified. If you want to be more conservative, you can purify the capital gains too. However, capital gains are an increase in market value of the company and not a direct link to the source source of the revenue. So how do you work out how much you need to give away? So we've talked about the impermissible revenue threshold, which is below 5%. If you're using a halal stock screening app, they'll likely tell you what amount you need to purify, or at least they'll certainly tell you what percentage of the revenue is impermissible. Let's say, for example, you have a company that earns 3% of its revenue from haram sources, and let's say they pay annual dividends of $10. You would then have to give away 30 cents annually to purify your investment. If for some reason you're not sure what percentage of the company's revenue is haram, you can use 5%, as that's the maximum threshold a company that is Sharia compliant is allowed to have. So you can use the 5% and purify the dividend by the 5%. Let's talk briefly about a change in compliance and what you need to do if a company that you invest in is initially halal and then becomes haram. What do you do? So there are a few different opinions when it comes to this and how you can go about what you need to do if there is a change in compliance. The first opinion says that you can wait a quarter or 90 days to see whether or not that company returns back to Sharia compliant. So let's say, for example, you've invested in a stock that's halal, which then becomes non-compliant. You can wait about a quarter to see if the company returns to compliance. And if it does, you can then continue investing in it. But if it doesn't change back to compliant, then you would then have to sell your investment and give away the profit, as it's no longer a halal stock to invest in. The second option is to sell it immediately and then give away the profits. My personal opinion when it comes to a stock that's changed compliance comes down to the reason why it has. For example, has it changed compliance because of the financial criteria? Let's say the debt percentage has gone up by 2%. There's a good chance that it'll likely return back to compliance within a quarter. But if the reason the stock is no longer compliant is because of business activities, for example, if you have a tech company that most of its core businesses are permissible, but they then introduce music as a product, there's not likely a chance that they'll stop selling music in the next quarter. So in that scenario, you may want to consider just selling the investment, as the revenue of the impermissible source will likely increase over the quarter. There's also then the question of what happens if you're making a loss on an investment and the compliance changes, and you don't believe the stock will return back to compliance. What do you do? So say, for example, you bought a stock at $100. It's now worth $50. You don't believe the stock will return to compliance. What do you do? So a disclaimer, I'm not an Islamic finance scholar, but from what I have heard and the opinion I sort of understand is that you are allowed to wait for the stock to return back to the original price you bought it at and then sell the investment. So you're not allowed to make a profit on an investment that's no longer compliant, but you can recoup the losses that you made from the investment. However, if you feel that the stock is not going to return back to the price you initially bought it at, it might just be best to cut your losses and sell the investment. You should now have the tools to invest in stocks in a halal way confidently, all the way from finding halal investments, setting up an investment brokerage, and purifying your investments. But of course, picking halal stocks is just one part of the puzzle. If you want to build a fully halal investment portfolio, you would also need to know how to create an investment plan that aligns with your financial goals, how to diversify your portfolio the halal way, how to invest in halal ETFs and mutual funds, and how to grow your wealth whilst minimizing risk. And that's exactly what we cover in the Halal Investing Academy, your step-by-step roadmap to building wealth in a way that's 100% halal, tailored specifically to Muslim investors. Click the first link in the description right now to join, and I'll see you on the inside.